On South African exports and inflation helped lift the rand today. South Africa's current account deficit has narrowed to its lowest in nearly 6 years. It narrowed to 1.7% of GDP or total economic output in the last 3 months of last year. Now, the current account deficit is the extent to which money flowing out of South Africa exceeds money flowing into the country. It adds, of course, to some economic instability and the likelihood of a downgrade as well. So today's figure was good news. The Reserve Bank says the deficit was smaller than expected after a surge in mining exports.
The current account represents the balance of exports versus imports. A deficit on this account means we are importing more than we are exporting in goods and services. In its latest quarterly bulletin, the Reserve Bank says we've significantly narrowed that deficit to 1.7% of GDP in the fourth quarter of last year, from 3.8% in the third. That is meaningfully narrower than expectations and largely thanks to a surge in the value of mining exports.
The mining sector was largely supported by a rise in commodity prices. As you know, that South Africa deals with a lot of commodities and we are a price taker. So when the dollar price of commodities increase, we also benefit somehow. So that led to the increase in the exports of mining products.
Of our current account deficit depends on a few factors: our trade balance, our liabilities to which we pay interest, dividend payouts, and the value of the dividends received. Had better export earnings come from manufacturing exports instead, it would have been more encouraging for the sector and job creation. That's according to economist Kevin Lings, who says, however, that the latest figure is welcome.
So instead of us losing money through our trade account every single month, every quarter, we've now got to a position where we are attracting foreign money into South Africa, significant value. That tends to then strengthen the currency, and we've seen that in how the rand dollar is trading. I think that will be sustained. In other words, I think that commodity prices will hold up internationally. China's growth seems to be doing okay. The US seems to be gathering a little bit of pace. World economy actually seems to be improving a little bit.
The value of merchandise exports increased by 3.7% in the fourth quarter of last year. That's a big improvement from the 6.4% decline in the previous quarter. Keeping the current account deficit narrower may go some way in avoiding a credit ratings downgrade later this year. The narrower than expected figure also saw the rand gain 0.5% against the US dollar this afternoon. Devin Murrigan, SABC News, Johannesburg.